Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
All right, guys. Well, listen. I think that we might have a market here today. If we're going to do this, though, I need you guys to remember the second rule. All right? The first rule, of course, about Speculator Seth is we don't talk about Speculator Seth. Remember, right? I don't want to see you out on Reddit or anywhere else talking about me. Okay? The second rule is not don't talk about Speculator Seth. I'm not that cheesy. No, the second rule is don't be superstitious. It's bad luck. You know what I'm talking about. So let's do this. We had some interesting movement overnight here. So, we got some rollover notifications for the currency futures. So let us do that and have our dollar index readjust. All right, so yesterday we had the ECB that seemed to be causing some early buying, and then the effects of the PPI being a little bit higher than expected, and the idea that our valuation for the treasuries and a 25 versus 50 basis point cut was, too dovish, and we sold down. And there was also an auction yesterday, which I neglected to mention, but the things went pretty bad. The auction was basically the low of the day. But after that, later in the afternoon, there was a story from Nick Timrose basically suggesting, at the Wall Street Journal, basically suggesting that the chances of a 50 basis point cut, that it was still really close, and that there was going to be some members that would be pushing for front-loading it. And that Dudley, who's no longer a member, Dudley was specifically saying that he would be pushing for a 50 basis point cut. So that caused the markets to start to reverse, and you saw that even more strongly overnight. Now, come back over here for a second. This is not, or the story, the Nick Timrose story, was not a sourced story. That is to say, he wasn't saying, I've been talking to individual members of the Fed and they've been saying this or that. It's Nick speculating that it could be really close. A lot of analysts, including Goldman Sachs and others, have come out and are saying they still think that it will be 25 basis points. So that move is fading. We might see it fade more today, but I tell you what, it's probably going to be volatile, and you might see some flows. You might see one side or the other kind of switch between taking over the market. All right. So that means that we could get some movement. We could get some trades, but I'm going to be trying to take those profits really quickly. All right. S&P 500, a little bit higher today. Still not back up to where they were after this rout of bearishness, but it's looking pretty good still. Okay. Oil also recovering a little bit, just below $70 a barrel. Gold and silver had a nice breakout. Silver is still kind of struggling, but gold now heading up towards what, 2,600? That finally, for the first time this year, I feel like gold looks strong. It actually makes me want to go and look at a daily chart of it. Maybe we'll do that in a second. Copper, well, it's still kind of, I don't know. Still kind of down there and not really building up the kind of momentum that I'd like to see it do. Japanese yen a little bit higher today, and the dollar seems, with Bitcoin, still about where it was. Definitely below 60,000. Going back to this Japanese yen and the dollar, I'm wondering now, today, I'm wondering that if maybe dollar weakness starts to become a stronger narrative in both the market and the world discussion and politics in particular. This morning, the Treasury Department kind of released their information about like what their deficit is and all of those sorts of things. It's over $1 trillion. It's kind of weird that they released it like overnight instead of at the end of the day like they usually do. And so I think you're gonna see people talking about it. So yeah, we've got a lot going on here today. Let's come over here and put out stream logs, notes, day. Mirror. I think it's an AOS, isn't it? Story. Let's just say WSJ. WSJ story says 50 BP. Close. Okay. We do have some numbers today, so let's see here. What was it? U of M. Okay. Dollar week. Then on the politics side, something that I want to keep you aware of is there is so I don't know what to type here, so I'm going to describe it to you first. There is somebody on Twitter claiming that they have an affidavit from a ABC whistleblower that the ABC debate was essentially rigged against Donald Trump, and that ABC News gave Kamala Harris the questions and essentially gave her assurances that Donald Trump would be fact-checked and that she wouldn't. So that, to me, seems like a pretty major story, and you might see market moves off of it. Rigged debate. Let's call it that. I don't know if it will come out before the market closes, but this guy said that it will happen before the weekend. And from what I can see, because clearly we should have reason to be very, very skeptical of such a story, right? But it looks legitimate to me. So we'll see it come out. We'll see how serious it actually seems and if the market reacts to it. But that is something that I think that we need to be on our toes about. Okay. Now, the other thing that we need to talk about, and I don't know if I'm going to list this as a flow, so I'm going to close this down. The latest in the whole debate saga is that Donald Trump on his social media website, Truth Social, has essentially said that he is not interested in doing another debate. I tell you what, guys, the reaction of the internet to this tweet is like apocalyptic. They are like really making a super huge deal about it. The lefties on Reddit are absolutely pissed. They really think that he should be forced to do another debate. The conservatives on Reddit are like, what is he doing? This is such a terrible decision. And I'm just kind of sitting here like, you guys really thought that there would be another debate? Like, what? Especially after that. Like, forget about who thought that they won and is it going to help them and all of that. Like, the debate was so biased. It was really absolutely ridiculous. I think the funniest thing I saw yesterday was this guy took the transcript of the debate and input it into ChatGPT and asked ChatGPT to analyze the transcript for signs of bias by the moderators. And it gives a rundown of the bias that the moderators showed, and it's just absolutely hilarious and brilliant. Donald Trump has zero reason to believe that he would get a fair shake in any debate, even if it was on Fox News, frankly. So why would he want to do another debate? Now, here's the thing. Let me segue back to markets here for a second, and you'll understand why. Everybody says, "Oh, the market is really that chart is really just a chart of human behavior and human emotions." And I think that we've done a very good job here on this channel of explaining why that's false, and that what the market exhibits is a lot of randomness. But there is one behavior that we see in humans that absolutely comes out in markets, and I think that if there is a characteristic irrational behavior exhibited by humans the most, it is this one, and that is humans tend to be overconfident. You ask them how they think they're going to do on a test relative to their peers, they all think that they're going to do better than they do. So if you go on Reddit, everybody is going to think that they know what's going on in the presidential election and that they can predict what's going to happen in the presidential election. And the reality is that they're not very good at it. It's actually super, super funny. I feel like that Redditors are the most overconfident group of people on the planet, frankly. And I had a lot of really funny conversations with people. Yesterday, I made a post, pretty long post or comment, in a Advice Animals post, saying that moderators shouldn't do live fact checks. That's not their place. And all a live fact check does is give people the impression that the moderators are putting their thumb on the scales and trying to help one candidate or hurt the other candidate. And it's not their job. The other candidate is there. They can do fact checks. You can have your own content outside of the debate afterwards to fact check people, but live fact check is not appropriate. And man, I got the craziest responses to that. Everybody was like, "Get out of here, you traitor," blah, 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 blah. It's so crazy to me. Like, my position here is like what if you asked people 10 years ago what everybody would say. Literally, not a single person in America would agree with like a quote-unquote live fact check. This only became a thing because it was like, this is a way that we can destroy Donald Trump. He does so well in the debates, but if we fact check him, it will blunt his momentum. Now, how well is that working out for you? How is that working out for you? I don't know. Let's see what happens. Because like I said, we tend to be overconfident. I feel less confident than ever about what's going to happen with the elections. But my gut says that if I go back and I look at the context and what has happened and everything, the context was that Kamala Harris, largely unknown, had an initial bump, is fading. Kamala Harris was the one that needed a game changer. I don't think that she got a game changer out of the debate. Ergo, it makes sense to me to just not have another debate. And like, here's the thing. Any other candidate, that would probably be a bad decision. Any other candidate would probably be a bad decision. Because the debate is like the best way to get your message out to the public and to get like a game-changing moment sort of a thing. But not for Donald Trump. Donald Trump has the ability to drive headlines on his own. As an example, and it's not anything that he does, but it just kind of works in his favor. Was the ABC debate rigged? I think that we'll get some more information about this today. That probably helps Donald Trump. It could help Donald Trump in a big, big way. He put out a that overtime should not get taxed. Should be exempt from payroll taxes and whatnot. Okay. Sounds like pandering to me, but you know what? for the group of people that he needs to win in Pennsylvania, they're going to love that. They're going to love that. It's going to work. There's something that can kind of move the discussion and the narrative in his direction. So he doesn't necessarily need a debate. So that's how I know all of these pundits saying that this is absolutely certainly a bad decision. Probably people being overconfident. I'm not saying that it is going to be a good decision. I'm just saying let's temper our ability to predict this sort of thing isn't very good. I can see why humans have this bias. Because if I get in front of you here on YouTube and I come in and I say, I know everything and I'm always right about all the things and this is absolutely what's going to happen, and I go and I take the most ridiculous position and I just really hammer it really hard, everybody goes, oh wow, this guy really knows what he's talking about, I'm going to follow them and all of this sort of thing. Whereas if I try and put nuance into everything, which is what I do, and I really careful about saying that our ability to predict these things is not very good, even if we're very good at it relative to everybody else, then everybody goes, well, he's not very confident, he must not know what he's talking about. So I see why humans tend to be overconfident. But you know what? Here in markets, at the end of the day, our job is to perform. I don't necessarily care how you feel about it. You have to perform. This is what drives me nuts about Kamala Harris's campaign, is that it's basically 100% about feels, and she's never accomplished anything. She's not good at doing anything. And we need a president that performs. Not just a president that makes people feel good. That the feminization of American politics is going to destroy the country, in my opinion. And, we're here to perform. And that means, especially in the markets, the biggest thing that will work against us in that endeavor is being overconfident. So, now let's see here. Why does a news company run a debate? I think X should do a debate with a non-biased person from outside the US. Oh, now that's interesting that you say it, person from outside the US. Because if it was going to be a debate on X, it would almost certainly be run by Joe Rogan, wouldn't it? So that's so funny. Yeah, I agree with you, Uzi. She didn't get a viral moment out of that debate, and there's no reason at all to give her a second chance at it. I think so. Now, if I was the strategist on the Trump team, I would probably be approaching it a little bit differently. I wouldn't have gone and made that tweet that he posted on Truth Social saying only the loser, asks for a rematch and all of this sort of stuff. And I'm not interested in doing another debate because you're trying to control the narrative there a little bit and everything, but you know that the Democrats are just going to come out and say, oh, you're afraid to do another debate. That's what that really is, right? No. The way that I would have presented it is, well, I would be happy to do another debate, but we had other debates planned and Kamala didn't come to them. And we originally had 3 debates planned. One debate was with Joe Biden. One debate Kamala Harris didn't show up to. And then this other one was the 3rd debate. That was all of the debates. So why should we plan any more of them? Especially since Kamala Harris tried to manipulate the rules and try to manipulate with the negotiations, saying that she didn't agree to these new debates, and then trying to hold him to that they agreed to the original debates, but then saying, but we didn't agree to the rules and all this nonsense. Why would you go through that whole thing trying to negotiate again? She is not a good negotiator. She is not an honest negotiator. So he shouldn't mess with it. And I don't know like what the Trumpy way of saying that would be, but I think that would probably play better for him. Maybe one person from each party should moderate. You know what though, Greg, like here's the thing. I don't think that being an unbiased moderator is that hard. Okay, like first thing, you don't inject yourself into the debate. These guys, they ABC, they did that. The guy literally argued with Trump about whether he was sarcastic or not in an interview a week ago. How crazy is that? I can't believe that is not the thing that everybody's talking about when it comes to the debate being biased. Like that you're fact checking whether he was sarcastic. That is not a fact. Only Donald Trump knows what he was thinking at the time and what his intention was. You might say, well, if it was sarcastic, I didn't pick up on the sarcasm. You could say that, but why would you say that during a debate? Isn't the whole thing you're supposed to be a fact checker and you're only able to talk and remain unbiased because it's actually a fact, but what you're saying is not a fact. So it's absolutely ridiculous, right? The second thing is there's the questions that you ask, right? So you can go through and you can say, okay, here are the issues that candidate A wants to talk about. Here are the issues that candidate B wants to talk about. And here's the overlap. And I'm going to make sure that there are some from the overlap. There are some questions that cover each of the things that they want to talk about. And then I'm also going to look at what are the things that they don't want to talk about, or what are some controversies that I can ask them about. You can ask them, let's say adversarial questions, but it's very easy to come in and say, what would be an adversarial question for Donald Trump? What would be an adversarial question for Kamala Harris? And then what do? You go and you ask the adversarial question to Donald Trump, and then you go and you ask the adversarial question to Kamala Harris, and it's still equal. And you can count all of these things, and people will be able to go back and look and see that it was it. And this is the way that presidential debates were run for forever, up until the point at which the primary debates were run by news networks, and news networks decided that they should start putting their thumb on the scale. It's just absolutely ridiculous. Because again, like 10 years ago, nobody would have said any of this. One of the things that kind of came out in one of these discussions that I was having with people on Reddit the other day was, they're like, well, we can't just allow Donald Trump to come in and say anything that he wants and get away with saying all of these falsehoods, blah, 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 blah. Dude, this is all politics. You act like politicians lying is something new. It's not. The politicians always lie. Does Donald Trump lie more than other people? It doesn't matter, dude. They lie. And the debate is not the place to correct things. The debate is the reason for the debate is so that the candidates can interact with each other and we can see how they interact with each other. It's not to present facts and correct facts and do all that sort of stuff. You do that afterwards. But what's happening is they're literally like plowing everything, right? We're undermining our debates. We're undermining the justice system. We're undermining literally every institution that we have, trying to destroy one person and failing at it over and over again. Just stop. He's gonna win. He wins 4 years. He's gone. These other things that you're doing will be with us for the rest of our lives. So here you come in, you want to fact check Donald Trump. Candidate's not going to show up if they don't think that they're going to get a fair debate. So what happens? We don't get another debate. And you know what? It wouldn't surprise me in the least bit, with the way that things have been going, that in 2028, whoever the candidate is declines to do a debate with the news networks because they don't think that it will be fair. And then you don't get any debates. Way to go. Maybe you defeated Donald Trump, but we have to live. Now we don't get any debates ever. Like, it's ridiculous to me. I think Trump does not lie very much, and the problem can't handle that. The people can't handle it. Well, so I think that Donald Trump exaggerates, is what I think he does. I think that very, very often what he's doing is he's embellishing things, and then the left and the news go take the embellishment and say he's lying, right? And it's not they're falling for a very easy tactic. Is you can come in and you can have a point. Like, hey, there are small cities, small towns in the United States that are being overwhelmed by an influx of immigrants, and it's destroying their communities. So what do? You come in and you say, they're eating the dogs and they're eating the cats. Well, was there like a cat eaten in that community? Like, that's all of the specifics of it. You know, it's false. You can say it's false, but like people are going to go out and research about it. And what are they going to see? They're going to see a video of the police arresting a woman that was eating a cat. They're going to see all of the residents talking about how pets are disappearing and people are going to the lake and grabbing swans and killing the swans in front of everybody and all of this. So like, first of all, what's happening is pretty crazy. He exaggerated it. They come in and they say, no, that's incorrect. That's not happening. And then everybody goes and looks at what's happening and they're absolutely shocked. Oh my gosh, this town is being absolutely destroyed by the immigration. Point Trump. That's what happens. And it's just absolutely hilarious to watch because it's like, these people can't help themselves, man. It's like, he's been pulling this on practically every issue since he started his campaign way back in 2015, right? So it's been like 10 years of this, and I still haven't figured it out. Like, what the heck? How about a debate hosted by C-SPAN? Well, but that's the thing, Greg, is that there was a commission on presidential debates. This is like a government-sponsored thing. And they were always in charge of picking the debate. They would pick a moderator. They would pick a venue. They would kind of set the rules and everything. And that's the way that all debates were run for a very, very long time. And after the 2020 election, the Commission on Presidential Debates, which the people that sat on the board of that were all very liberal, kind of decided that the debate format needed to be changed because of Donald Trump. And Donald Trump didn't think that they would pick fair moderators, didn't think that they were picking fair rules, etc., etc. And so that's why he said, I'm not going to do the Commission on Presidential Debates. And then the media companies came out and said, well, we could host a debate and here would be the rules. And then he wasn't really going to do them, honestly. Like, his kind of thing was like, he wasn't going to do any debates this time. But, you know, it kind of turned into a thing with Joe Biden, and there was this back and forth and this negotiating, and he kind of got wrangled into doing it. So that's why this happened. Because what you're thinking is like, why isn't there like a neutral platform to? There was, and it became unneutral, and that's why we're in the position that we are. You go and look at the way that things are going, man. It's absolutely crazy. Like, Donald Trump excels with long form answers. So what did they do? They make it so that your answers can't be more than 2 minutes, right? Fact check the candidate's life. He's really good with back and forth exchanges where you're directly talking to the opponent. So your mics are turned off when the other candidate is talking so that you can't go out of turn. All of these things, right? Like the everything about the debates this cycle have basically, the rules have been changed, tailored to be anti-Trump. And quite frankly, I still think that he won that debate. Like, this is, again, one of those things that's like, you might be watching. It's like you ever watch a boxing match. I don't know anything about boxing. I think there's something like a normal hit is like 1 point and a hit to the head is 2 points or something like that. And they somehow they just are able to count up all of the punches on slow-mo to get the points to decide who wins. I'm going to be watching a boxing match and get to the end of it, and I'm going to think, oh, I thought that this one guy who was kind of showboating and looked really confident, he was the one that was going to win, but then they pointed up all of the points and it was different. And I think that the debate was a lot like that. To a casual observer, you might look at it, and especially if you're a left-leaning kind of a person, you're going to think, oh, Kamala Harris won. But I think that when you kind of start to count up all of the points, that it was actually a good debate for Donald Trump in many respects. And there's been a lot of polls and especially focus groups in particular. Because I mean, the thing is, I don't know if we're really going to know what the impact of the debate was for a week or two. But, you know, so there were some focus groups and things like that, you know, support for Trump went up after the debate. So were her earrings the Nova H1 Bluetooth or Tiffany Pearl? Well, let me tell you something, Greg. You would think that doing a drug test before the debate and being scanned to ensure that you don't have any kind of communication devices on you would be like a standard rule and practice for the debates, but it's not. And you have to wonder why. Why do you think that is? It's because it's a more common practice than we probably think for candidates to cheat at debates. So it wouldn't surprise me in the least bit to find out that they were in fact Bluetooth earrings, but I don't have any evidence to suggest that they were or weren't. I've seen many things in many debates from candidates that kind of suggested to me that those candidates had earpieces in. I think it's probably way more common than people think. Like, dude, at that level, we're talking about becoming the most powerful person in the world. It is the biggest thing. You will do anything you can get away with. People will do anything they can get away with. And if you think, well, I'm a moral person and that's wrong and I'm not going to do it, the person that's not the moral person and is willing to do it is going to win. So when it comes to politics, you kind of have to think like a psychopath and do everything that you can do, as long as you can get away with it. Because of course, if people found out that you had an earpiece, then that would be a big bad. That would be super bad, right? But this is going back to the whole thing that it's like, you know, did they give Kamala Harris the debate questions beforehand? Maybe. When it was found out that Donna Brazile gave Trump the debate questions, remember that was leaked. Like, it wasn't like it was leaked in a news story and all this. It was like leaked in the emails, right? Remember the DNC emails were leaked, and then we found out from that Donna Brazile had leaked the questions. And then the media tried to play this like, well, but these are fake. It's not real. We all knew that it was real. You could go and verify the Google signatures. You can't fake that. That's how we found out. And so it wasn't like this big news story that hit and it was like, oh, all of a sudden we know. And it was but we found out that she shared the debate questions. Was it like a huge controversy? It wasn't. This one, the way that it's being released, I think it's kind of being released in a more timely and relevant manner. Then on top of that, it wasn't just that they leaked the questions, but also they gave her assurances that Donald Trump would be fact-checked and she wouldn't. That seems like a big deal to me. Seems to me like Harris was kind of cheating a little bit and she's going to be found out. And then we'll see how the public reacts. Nice absorption at 1508. What are you talking about? Bitcoin? No, that's not Bitcoin. Bitcoin is at 57. Whatever. I'm stupid. 15. Oh, you must be talking NASDAQ. You must be talking NASDAQ, yes. Hell. Oh, you are talking the treasuries, just not putting the things out. Well, so what I'm seeing at the moment though is like started pretty quiet. We've had a little bit of about a 10K change in cumulative delta higher. I'm kind of more interested in if a flow comes in that's short, a hawkish flow, but I'm not seeing that. When you look at the absolute number that was traded down there, like for instance at 08 half, 18,000 isn't that much. Like 18,000 in an iceberg, that'd be a lot, but 18,000 over the time, the distribution areas tend to be more like 50, 60,000. So I'm not so sure that I would call it absorption down in here as much as it was just kind of resting, and we've had a small flow come in. Yeah. Well, that's a good point, Uzi, that we're trading near the high of a pretty long, well, I don't know. Let's come back here and look at the chart where we're at. The high of that range would be at 23 half. That's still quite a ways up there. But I'm just trying to give the context. That was like a relatively small move. I'm not one that I think you could really do a super, that I think we have super strong indications to predict. So that kind of fits into the right. Like if I were to go, what are the rules of day trading with speculator Seth? Rule number 1, we don't talk about speculator Seth. You want your edge to remain your edge. Speculator Seth is part of your edge. Don't talk about me. When there's a red thread on Reddit, like who's your favorite YouTuber, don't mention me. I will become, the channel will continue to grow organically. Through word of mouth and through the algorithm. You don't have to go out and promote it, right? Rule number 2 is not, you don't talk about speculator Seth because we're not that cheesy. Rule number 2 is don't be superstitious. It's bad luck. Why is that? What I'm really trying to say to you is you need to leave any of your preconceived notions and biases behind, because they will work against you. The instant that you start to think that there's something about this day that is superstitious and whatnot, it will work against you. It will work against you. It will get into your head. You make bad decisions. Rule number 3 is you suck. Rule number 3 is you suck. And I'm not saying that to like discourage people or anything like that. The largest bias that will work against you is being overconfident. Everybody's bad at trading, especially at first. Our ability to predict things on short time frames is very, very small. Our ability to make money from outright predicting things is very limited. Ergo, we all suck. We're not good at it. That's rule number 3. I guess if there was a rule number 4, it is you got lucky. If you did well, it's much more likely that you got lucky than it was that you actually have like a real edge. So yeah, we had a good move. Don't pat yourself on the back too hard, because based on the flows and everything else, it kind of looks to me like it was just kind of like a random move up that doesn't really mean much. But anyways, it is kind of interesting positioning because we are within a range that we've kind of had all week. And we're kind of close to some areas where it seems like something could happen. But we're still in the middle, aren't we? You gotta wonder about yesterday because, like, especially with the whole ECB thing and everything, like, it buying up really hard at the beginning and then just absolutely collapsing, only to then levitate a little bit lower. The markets, because when I saw people talking about, well, because in chat yesterday, some people were still talking about, will it be 50, 25 or 50? And I was like, it's got to be like 90% chance 25 now. Like, why are people still talking about this? Because I hadn't seen the Nick Timmerell story yet. So then, you know, I woke up this morning and analyzing everything and all of that, and all of the descriptions kind of made me think that the Nick Timmerell thing had made a really huge impact on the market. But looking at it here this morning, it's kind of like, not really. I mean, I guess they kind of retraced yesterday's move, but yesterday's move was kind of a little bit weird anyways. So that still kind of puts me in like I think that we could have moves. So I'm kind of here looking out for, if we start to get a flow going, I could go with it. But I am not looking to hold it all session, right? I'm looking for the instant that I get any kind of pushback on that trade, I'm getting out. Because the market's going to be really testy like that. It's not going to take very much to get them to move. You're going to get a lot of phantom moves and on the DOM, do you know how to add let's see, here it is. I'm missing a word here. No. How to add volume at far end of the bid ask columns? Do you mean you want the volume profile to just be moved over to the right? Because on the Jigsaw DOM, if you move your mouse up to the top of the DOM, you will start to see either the little pointer hand or the little resize arrow. And that allows you to both reorder the columns and change their size. And sometimes it might be screwed up, and then that just means that you need to like reload the DOM with a fresh template. But you probably won't have that problem. I have that problem because I'm like using a template from forever ago. I don't know if that's what you were asking about, but there you go. Oh yes, that's right. Hold on a second. Oh, okay. We're okay. No, I want to know how much traded on each price. Well, but isn't that just the volume profile? Did you? Nope. I will never message anybody. If you message me, I'll respond, but I will never reach out to you. Never. Why would I do that? Probably a scammer. I tell you what, I was thinking about this morning because, you know, I'm kind of in a weird and unique place here in the markets. I'm one of the top experts on futures in YouTube, and especially in the treasuries. I don't think there's much anybody else talking about treasuries. And you know, this empirical research about how limit order books work. Nobody else talks about that. And it's not anything special about me other than that I studied this stuff and I happen to have a YouTube channel. That's not like necessarily what I'm good at. What am I good at? I'm a super hyper computer nerd. That's what I am. I set it, I get it running, and I keep it running. That's what I do. So I built a robot to ban scammers from our Discord. As soon as they try to impersonate me, they get banned. They try to do all sorts of funny little tricks, like have just slight variations of my name and things like that. The robot still catches those. Over the past 6 months, the robot has had 100% uptime, and it has not missed a single person. Bans all of them. So I feel pretty good about that. I'm like, hey, Seth, you are good at your job. But the problem is that I can't prevent them from messaging you. So, yeah, if anybody, frankly, if anybody messages you unprompted, I can understand if like you're talking to them in the Discord channel and then they reach out to you and start sending you messages. That's different. But if somebody, you're not talking to anybody and they just message you out of the blue, that's a scammer. Don't talk to them. There are very few people on YouTube talking about futures correctly, and even more so on the treasury. Yeah, and honestly, like the other creators that I've seen that talk about futures, for the most part, don't know what they're talking about, right? The ones that do know what they're talking about, they'll have a few really boring videos and they aren't super popular, right? Of the people that have actually tried to make good quality content, I'm kind of the only gaming in town. Which is really weird to me, because again, it's like I don't know if I'm particularly great at making videos, and I don't know if I'm some particularly special expert on futures. You know, I'm not like the educator at the CME. The CME has an educator. If I was going to ask questions about futures, that would probably be the first person that I would consider to be an expert. I forget his name, but he's a nice guy. But you know, like, I'm the one that ends up having the YouTube presence, and nobody has challenged me. You and Mr. That, I've never heard of them before. Yeah, I you know, this comes back to this thing where I'm itching, like, I need to make some content. I've got some videos coming, and I've kind of had a couple of weeks where I didn't really fully take advantage. I should probably try to record this weekend. I don't know what's going on, so I need to look at that and maybe look at what's going on next weekend and then determine if I'm going to record and edit a video or not. I may decide to do more of the fun videos, so like the chair. Make a video about the chair. You talked about you on one of your streams. He says you're a good trader, nothing but good things. Oh, well, that's good. I thought you were about to say, when I originally read that, I said not good things. So I was like, oh, what did he actually? No, you know, like, so if somebody, if I was on Reddit, I've had this planned out in my head, so when you see it, it's not going to be as funny as it probably should. So I probably shouldn't tell you my plan, but my plan is, you know, someday there's going to be a Reddit thread or a YouTube or something like that, and somebody's going to name me in a way like, you know, this guy is really good, you should go and watch him on YouTube, and like it gets a lot of attention, and I'm going to go and I'm going to respond to it, and it'd be like, Speculator Seth, why would you watch that guy? Like, he doesn't even take trades. My biggest thing this second half of this year was I was so traumatized from getting the beginning of the year wrong. I've been a pussy the whole rest of the year, man, because we had some good opportunities this week that I missed. Did pretty good last week, but this week it was like better opportunities, and I kind of didn't see him coming. This up move is starting to turn into something a little bit more than just a an up move. But it's not. I wanted to take a short, so I'm just kind of sitting here like ignoring it. Gold is really running, man. Gold is the trade today. Jeez. I'm kind of skeptical, like, that the treasuries can continue to hold this. Once they get above 16 here in the treasuries, you start to get some problems, because then you're beyond those break-even lines in the inventory cost basis indicator we have. Which futures prop firms do you? None of them. I'm not a fan of prop firms. I say just put, you know, $2,000 in an account and trade micro treasury yield futures and just trade super small. You know, if you don't have the money or you're not confident in your ability yet, just make the smallest account you can and trade the smallest size that you can. That will last you longer than a combine account will. But when I did do it, way back in the day when I started, I was using Top Step, I believe. I was using Top Step, and I've done things with Earn to Trade, I think it was. Apex was the one that wanted me to like have affiliate links and all those sorts of things, but I want nothing to do with them now. If a prop firm reached out to me to sponsor a video, I would let them sponsor a video. If like the Top Step guys wanted to chat with me, like they get interviewed on my channel or I get interviewed on their channel or something like that, I would probably do that. But like, especially when it comes to affiliate links and like actually endorsing their service, no. You can advertise on my channel, but I'm not going to endorse you. That's how I think of it. Because like, it is a legitimate service. It's just, it's not a service that I personally am a fan of. Especially Top Step is the only one that I really think is like really reputable. There's other people that really care and are trying to do the right thing, but like, they're new, they're not established. How can you know that they're really being honest? And like, frankly, there's just too many people trying to use the same business model. It's kind of, like, I'm not a huge fan of this. Okay, well, this uptrend has moderated a little bit. Have you tried creating an algo using your indicators on trying to make algo based on price action? Yeah, well, yes and no. So I do have one algorithm that is essentially like what I tried to do on my own. And it back tested well, but like, I don't really have the ability to like really, I don't have good quality data. So it's this kind of comes into this weird spot where the kinds of automated strategies that I'm interested in making, I don't really have a good way to build and test them, because they do require, it requires a certain amount of training the model. And, you know, if the back testing is unreliable to begin with because of issues with order flow and cumulative delta and historical tick replay, then your training's not going to be any good, right? And so that's why I haven't really bothered like running it and messing with it. And then on top of that, like, because it's such a side thing anyways, if I do have an algorithm out there, I will totally forget about it, right? It'll be like, I'll put it up there every day because you have to put it on and like enable it in NinjaTrader. And then I'll forget about it on Monday and I don't put it on there. And, you know, 6 months later, I'll be like, oh, wait, wasn't I supposed to be testing this or this, you know? So I kind of haven't been worrying about it much lately. I have a bunch of data that I've been saving and I, you know, kind of need to do a project on that. Because that's like the live data, and then if I did the back testing on that, should be good. But haven't really gotten around to doing it. Oh, I missed the rest of your comment. I'm trying to make an algo based on price action. No, price action is nonsense. So the issue, so first of all, I can tell you how price action works and how you do it, right? Most price action strategies hinge very significantly on Dow theory type setups. So Dow theory is basically like there are different time frames of the market and they will tend to go like this. So like there's the day-to-day fluctuations that are like small, but then there's like peaks and troughs. And when you get higher lows on those kind of second level troughs, that tends to indicate that the long-term uptrend is up. And if it switches around, right, like now all of a sudden the last trough is down there, that's a very strong indication that there's been a reversal in trend. And if you back test this on daily data, keep in mind, that strategy has in many cases outperformed the market, but it's kind of a little bit, it's more complicated than that. But let's just say for the sake of simplicity that it outperforms the market. Okay. So what people did was they said, oh, well, we can apply this whole Dow theory thing to intraday data. Okay, well, doesn't really work because markets on a short-term basis are extremely random. Okay, but if you really want to test it and everything, how do you do it? Well, NinjaTrader has a way of doing it, kind of. There's an indicator called Zigzag. It comes with NinjaTrader. And it basically, you know, if this is our chart and everything, it draws a point here and it draws a point here and it makes a line. And there's even some methods that will basically like give you what the last point was. Okay. Now the issue with the zigzag indicator, I really don't like the way that looked. The problem with the zigzag indicator is if it comes down a certain amount, it will go, okay, here. That means that the last point was there. And then what will happen is this will actually go higher and it will go, oh, actually the point wasn't here, it's actually up here, and it will redraw. Okay, so zigzag redraws. That's the important thing. So if you are doing anything with zigzag and you're looking at the latest point, that is 0.0 in the little lookup function, that one moves, and so you can't trust it. All right. But what you can do is you can look at the ones that are further back. So is this actually a legitimate point? We don't know yet, but we know that this one was. Okay. So based on that, you can kind of do most of the price action strategies that are out there. you can then do your setup. You can also make your own version of zigzag that basically doesn't draw the point until it's completely confirmed, and draw a mark on the chart at the point it was confirmed. I don't have one like that for zigzag, but I do have one for that on pivots, which is a similar setup, but the way that it knows that there's a pivot is if you close below the previous bar's low. So like if we have a chart like this, right, and the previous bar's low is here and we close down here, then I know that there was a pivot here. So my indicator will draw, here was a pivot, and then here's where it was confirmed. So we'll draw like a little open circle right there. And then the beginning of the next bar is where your entry would be. Okay. And so I've done back tests on those. That's how I've back tested it. I haven't built the zigzag version of it, but zigzag is what you would have available to you. So, and I have used zigzag in some back tests before. Like that's how we proved the smart money concepts idea was, we looked at the performance of that. Some other things that you will see is like, if they breached the low, like you can just come back and say, what is the low of the last 1,000 bars or whatever look back period you want to look at. And then that would tell you when there's a significant breakout. That's a good way of indicating that there's been a breakout. There's also, people like to do the fair value gap thing. This is where you have like a bar like this, and like this. And so if you look at this bar and you say, if the high of the bar after it and the low of the bar before it, and if there's the difference between those two prices is more than yay much, then that's a fair value gap, right? So you can identify those bars very, very easily programmatically as well. So you can backtest all of that stuff. But I'm just telling you, if you do any kind of a backtest on 1 minute data and the entire basis of your strategy is trying to look at some pattern in the movement of that one instrument on its own, there's practically zero chance that you'll have any success with it. It's not like it's impossible to find it, but like you're gonna have to be doing something really weird that nobody's discovered before. They just don't work. Market makers intentionally inject randomness into the market. The market makers and the people that are trying to use that actually use the liquidity that we provide, they know what all of these strategies are and they know what is kind of popular at that time and take advantage of those to your detriment. So that kind of approach just doesn't work very well. Zero MBOs in ZN price can move at ease. It looks well. So remember that we do have fairly University of Michigan consumer sentiment and inflation expectations is a relatively major data point. So market may be just kind of biding its time until that. Anyways, so now that I've dashed your dreams about price action, what works? Where can you go and you can look for things? Okay, well, what we do is we look at order flow. So there are some very interesting statistical aberrations in the market. And the most significant one is what we call the auto correlation of order flow sign, which is to say, if I look at what the best bid and best offer is, if I see volume go off at the best offer, then I know that the aggressing orders, the market orders in that transaction, were buys. And so that is the sign of that order. The sign of that order is positive. Versus if it was at the bid, I know that the sign of that order is negative. So if I go in and I randomly choose an order, and I say, is it positive or negative? Okay, it's positive. And then I come back and exactly an hour later and pick another random order, there's a 0.05% chance that that second order will have the same sign. That's like the most pure way of explaining this statistic, okay? But what does it mean in reality? When there's an imbalance between the market buys and the market sells, that imbalance tends to be persistent. It tends to last for hours. Why is that? Well, there's been a lot of theories, but the best research that we have strongly suggests that it is caused by extremely large players executing orders that literally take all day to fill. The way that they determined this was, they would do a model. They said, well, is it because everybody sees that it's going up and so they try and jump on it as well? And so then they would make a model that would do those things and see how it behaves, and it wouldn't match what we actually see in the market. And it wasn't until they said, well, but what if there's just this one guy that's like buying all day? And then you started to see all those behaviors. Okay, so that's why it happens. So that's why, like, one of the algorithms that I like to do is you just come in and you say, if there's an imbalance between the market buys and market sells, and there's a certain amount of autocorrelation on it, which is to say, like, if you're looking at cumulative delta, do I see a consistent rise in cumulative delta over time? And if I do, then I buy. So that's one kind of basis of a strategy that you can kind of take advantage of. You might need a little bit more than that. There's also a lot of research happening recently where they are putting, order book data into these models, basically doing the same thing that we're doing here, looking at major changes in the book and how it's ticking up and down, how many orders trade versus how many orders were actually being presented, and kind of treating each of those events as a word, and then passing those words into a ChatGPT type of model to, find situations where the model can very strongly predict what's going to happen next. So there's a lot of models like that. Okay, so order flow. The point of all of this, though, is there are some profitable strategies that we know of with order flow. You want to come up with your own strategy, but there are existing profitable strategies dealing with order flow, and they tend to be extremely short time frame, which is a few seconds to a few minutes maybe. Okay, so for a retail trader, might not necessarily be the most fertile ground for you. It becomes something that, like, if you're going to trade discretionarily, like it's absolutely an essential tool, but maybe not like the primary source of your edge. Okay, so that's one thing that works. What are some other things that we know that work? Arbitrage is something that we know that works. So you have two really closely related instruments, and they diverge because they're on different exchanges or whatever the deal is, and you buy the one and sell the other until they come back into line with each other. That's a trade that we know of that works. Now those are like day trading strategies that we know work. The other strategies that we know of that work tend not to be day trading strategies. For instance, momentum. Momentum is you manage a portfolio, you look for breakouts, or using moving averages to identify instruments that are trending and then just jump on board. That strategy hasn't been doing very well lately. Like, it didn't do very well, and then COVID came along and it did really, really well, and everybody's like, oh, it's back, and then it stopped doing well again. So I don't know if momentum is the one that you want to get into anymore or not, but it's there. Trading the basis is another one that we know works. So if you were really like, I want to trade and all I care about is that the trade makes money, and I just want to go in and I do that thing, your safest bet is probably to trade the basis. So what trading the basis is you own the actual cash commodity and then you sell the futures against it. So you like, if we're going to trade the treasury basis, I can come in and I can own $100,000 treasury bond, and then I come into the futures and I sell the futures, and then when delivery day comes, I deliver that $100,000 bond to somebody. And what will happen is, over time, the futures price and the commodity price will converge on the delivery day. And so you're just pocketing that difference. That difference tends to be a little bit more than the risk-free rate, because the way that they determine that amount is like, what is the risk-free rate? Ergo, like, what are you paying in interest to hold that position on? And what does it cost you to do the delivery? And what does it cost you to store that thing? I guess that doesn't really matter for treasuries, what it costs you to store that thing, but that's basically that amount. And then you're just taking that amount. Okay. And that strategy, like on delivery day, like they're basically always the same. So you're hedged. That is a strategy that like 99% of the time works. You don't make very much, but 99% of the time it works. What's the 1% of the time that it doesn't work? The 1% of the time that it doesn't work is when really late in the contract, something really unexpected happens and the market goes into complete turmoil and volatility shoots through the roof. And in that situation, the cost of the future would diverge. So here's the future. Here's the cash commodity. It's moving down. And here's the future. And it's coming down here. But then something crazy happens. The price of the future skyrockets up, right? If the amount that the future skyrockets up is more than the amount of excess of extra capital that you have in your futures trading account, which is to say you trade one ZN contract and you know it moves up more than a handle on you, and you only have $1,500 in your account, then you'll get below the $500. Well, sorry, it's more than that. It's like $2,500, isn't it? Right? Anyways, you go underneath of the marginal requirement, then you get liquidated and you have to eat that loss. Even though if you were able to continue to hold it, you're almost guaranteed to be able to, you know, do the delivery and make money. Okay, so I gotta mention the risk with it, but that's trading the basis. That's a strategy that we know of that you could trade and almost certainly make money. Problem with that one is you have to have a lot of money and you don't get very much yield on it, right? They're basically saying like you're gonna hold $100,000 in the bank all of the time to be able to buy that bond, and then you're gonna have a certain amount of capital in your futures account to give yourself a buffer. You know, and then you're only going to make the risk-free rate, which basically means like maybe you make 5% a year right now. Okay, but that's the strategy that we know works. Oh, yes. What was the reason that you said if I find an opportunity, I'm looking for short? So the situation that we have right now is that we have a Federal Reserve meeting next Wednesday. And there is some controversy over whether the decision should be a 25 basis point cut or a 50 basis point cut. The market has essentially converged on, because of the data, the non-farms that we got being bad but not super bad, and the inflation numbers being a little bit higher than expected, the market has settled on that it will be a 25 basis point cut. But late in the afternoon yesterday, the Wall Street Journal put out a story speculating that a lot of members will push for a 50 basis point cut, and that it will be very close between whether it will be 25 or 50 basis points, which is why you saw the treasuries move up late yesterday and overnight. But most analysts are still firmly in the camp that it will be a 25 basis point cut. So I am looking for, if I see flows related to that, flows basically trying to put a bet on that it will be 25 basis points, then I could try and go along with that. I don't think that I would really see them until after the University of Michigan news. So that's another thing that I'm kind of waiting on. So we'll wait for the University of Michigan news, and then we'll see if an imbalance starts to form or not. But with the way that it's been trading and everything, it's kind of hinting to me that they don't want to do it. That while there might be reason to go short the treasuries because it's not being priced in and everything, with the volatility that we've seen and the speculative nature of it, the speculators are saying it's not really worth trying to put that position on going into the weekend. So I'm kind of not as bullish on the trade as I was at the beginning of the session. I don't know if you already mentioned it, but it humors me deeply. 33,000 Boeing workers went on strike. Really? I think Boeing is a perfect example of where a lot of the ideas that just completely permeate all sectors of the business world that are incorrect assumptions reached based on short-term market behavior just will absolutely destroy companies. Boeing used to be such a well-run company, so focused on engineering and doing the engineering the best. And then the business came in and said, well, we want to squeeze as much money as we can out of this, and part of that means not doing our engineering as good. And now Boeing is paying for it. And now they're going to have worker issues. All I know is that that's not a stock I'm interested in being in right now. You know, if it's down in the dumps and the CEO goes away and the new CEO comes in and says, you know what, we're just going to be a good engineering firm again, then maybe I would buy it. But otherwise, that stock is dead to me as far as I'm concerned. I don't pay too much attention to it anymore. It used to be on my watch list. Well, it is on my watch list. But it used to be on the list of, oh, maybe I would buy this. Not anymore. Man, these headphones, I think I'm going to return these headphones. They're about $350. The big feature that makes them $350 is this little transmitter. So it's like a 2.4 gigahertz wireless transmitter. So when you plug this into something and then it transmits to the headset, and you get wireless audio, and there's only a 16 millisecond delay. So 16 millisecond delay is like how much sound gets delayed yelling at somebody across the room. So it's kind of like, you know, if you're in a room that's really echoey, right? That's basically, if you're listening on the headphones and monitoring your voice, that's basically what this sounds like. So there's a little bit of an echo, and it drives me crazy. So I wanted the wireless thing. I wanted to not have to be tethered because I wear these pretty much all day. But the killer feature turned out to be not so killer for me. I think if you were like playing a guitar or an instrument and you had like a studio where you were constantly moving around the studio, then having wireless headphones would be a huge deal. Be a big deal. But for a streamer, turned out to be not as good as I thought. The headphones themselves say that they're really good. Very great construction, and all of the parts are replaceable. So like if something breaks, you just replace that one part and you don't have to replace the whole headphones. And then, you know, like there are these wires, but these are pretty thick wires and everything. So like the chances of anything getting, you know, broken, because the issue I have with some of these other ones like these is you'll get like these it's just like it's coming apart there. You see that? And then the wire gets frayed or broken or whatever, and then you can only hear out of one headphone. So these headphones are falling apart. These are very sturdy, but also the ear pads are super great. It's like this microfiber suede kind of feeling material. The phones themselves feel super cushy and padded, but in order to get the best sound profile, they want those ear cups to be really tight and close around your ears, and the speaker to be really close to your ear. And so the result of that is that your ear is touching the ear pad pretty much all the time. They're over ear headphones, but they really aren't. Like they're too tight. So when I take them off like that, and then I can feel like with the spots where it's like, oh, geez, it is touching my head. The material is comfortable enough that it doesn't bother me a ton, but especially wear them all day, nah. So they're not as comfortable as my previous headphones, and the killer feature doesn't work very well. So I spent an extra $100 for nothing. So I'm thinking, no, these weren't a good purchase. I should return them, but haven't even had them for a week, and I can return them within 30 days. So I think I'm going to get different headphones and return these ones. Use them until the other headphones come and return these ones. You probably don't care, but it was on my mind. Can you share your strategy using order flow, please? Well, I already did that, but let me try and be a little bit more specific, okay? Here's a chart of the 10-year treasury. There's an indicator in NinjaTrader. It's called R squared. There's another indicator in NinjaTrader. It's called cumulative delta. If you don't have a full version of NinjaTrader, you can go and download your own version of cumulative delta, because it's a full license only indicator. Okay. But anyways, put R squared on your chart, and then instead of putting R squared on price, have the underlying data series be cumulative delta. Okay. R squared is basically a measure of how consistent the uptrend is. Oh, we're about to get the news here, by the way. 1 second. Okay, a little bit of a move. Five-year, we got 3.1 versus 3, and 1 year we got 2.7 versus 8. So the 5-year was slightly higher than expected, and the 1 year was slightly lower than expected. And the expectations was a little bit higher than, the sentiment was a little bit higher than expected at 69 versus an expected 68.5. So a little bit of a move in the treasuries here, but not too much. And I am kind of thinking now that we might see it balance out a little bit, and then we'll see if any meta orders start to come through. Okay, anyways, going back over to here. So this right here, this data series right here is R squared on price. So what is it saying? It's saying down in here, when it's below 02, There's not a whole lot of trend. Look at what the market's doing during that period. It's sideways, right? Now that we're starting to get a little bit of trend, you start to see it come up there, right? So that's what it's telling you. So if you had a trend that just was like this, right? R squared will basically go up to 1 and stay up at 1. That's what R squared does, okay? So you put R squared on cumulative delta and take your trade based on which way the order flow is going. Because this is basically what it's saying is high probability that there's a large meta order in the market that could persist. So I don't like the spread in the micros here, but and I also don't like the part of the range that you're getting. But there is some flow short coming in, especially in the 5-year, which, given the kind of trade that I'm looking for here, I would expect to see those flows be stronger in the 5-year than the 30-year. I guess that means that I think I should see some flattening, but I don't know if the yield curve is going to flatten. In fact, like right now, the trend is that the yield curve is steepening. Which would mean if we were to get a down move, it would actually, the 30-year would lead. So, but that does mean, okay, and we did kind of rebalance back around 115. So that makes the yield curve a key thing to watch here. Need to come back over here. You got an email that suggesting that they're not going to release Jigsaw today. Well, were they really going to release it on a Friday? You never do release on a Friday, guys. Yes. Do releases Tuesday, Wednesday. Actually, I think that the reasons for you never do a release on a Friday are kind of a little bit selfish, because it's like if something breaks then you're stuck all weekend working on it, sort of a thing. Okay, so I'm noting a little bit of fight here in the treasury, especially in the 30-year. So I'm not getting signs of a flow per se, but there is kind of something going on. Those fluctuations may be them trying to follow the correlations with the Japanese yen, because I am kind of seeing the yen tick up and down there a lot. I also want to note we haven't been seeing as many big orders today. Last time we saw big orders was back at 13.5. So I guess one of the ways that you could read it is that we've got the value area from the volume here. And it looks like that the market may be willing to fight it out a little bit in here. But we might not really have a really strong indication that like a trend is forming unless we're able to break out of that. I'm only mentioning that because it would be a good heuristic in this situation. a lot of people, they trade off of those levels, you know, every day, and I'm not a huge fan of that. But in this case, I think that they might be useful. Let's see here. Gold, drifting back. Oh, I missed the other part of Mahadev's question, which was what order flow do you recommend? Well, I use Jigsaw. I really think that the Jigsaw DOM gives you the best view of what's happening. I really do. And I have affiliate links for that in the video description and everything. You know, I haven't really seen, the only trading platform I've ever seen that I thought was bad was MetaTrader. You know, pretty much everything else, you know, has their advantages and disadvantages. And so it's really a matter of, well, and especially if you're new, it's kind of tough because you don't necessarily know what's important to you, right? But it's a matter of determining what's the most important to you and going and finding the platform that plays to that strength the best. You know, like I like NinjaTrader. If spread trading is your thing, NinjaTrader might not be the best platform because it just doesn't have, you know, I've been able to build stuff for it, but it just doesn't have very good tools for trading spreads. If you're going to trade spreads, you probably want to use trading technologies, and I hope that you have the money for it, you know? Okay, so the 5-year did come down. And is it because the Japanese? Yes, it is. The Japanese yen fell down there. Not a move in the dollar, but there was a move in the yen. Yes. So I'm kind of keeping an eye here now on how the liquidity in the micro is reacting to the liquidity in the full instrument, and or how it reacts to me. Okay, so I hit it with an order, and 2 other orders came in after me, following me, and then 3 hit at the next price, and now the liquidity at my price is kind of full. So that's curious. But that did happen along with the downtick in the 10-year treasury. So downtick that didn't hold. So they're like right there on the edge. So I'm maybe a little bit early on this. We'll see if this works out or not, or if this fizzles out. When you mentioned trying to exploit imbalance in the bid and offer, is that the same as looking for stacked imbalance? No. Well, so when I say imbalance, like I'm talking about cumulative delta. If cumulative delta is moving, then there's an imbalance in the market orders, right? I'm looking at all market buys minus all market sells. Is there, you know, a divergence between those? Because what you'll see is there might be like 5% more market buys than market sells. And the reason that that's significant is that that kind of an imbalance tends to persist over a long period of time. In other words, you get trends. A little bit of an iceberg on the offer there. I don't know. I'm already kind of not liking the way that it's behaving. So the way that it reacted to my orders and the way that it's reacting in this particular location is okay. But I was really kind of expecting to see more sellers step up to try and take it below 09. So there's 80 contract. Well, okay, so now they took it without having to. Okay. Okay. That's more like it. Now we'll see if they go for the low. It's probably going to take a little bit more than that to get over the 08 half and 08. Like they kind of slipped through there, but now this liquidity, once you start to get into the new prices, less probability that liquidity just pulls, because those are orders that have been sitting there for a long time and probably want to be. That's why you're going to see, like, on a volume profile, you're going to see an area like they slip through, and then you get to the place where the liquidity's been there for a long time, and then there's more latent liquidity there. But it also ends up being a really good test for how strong our flow actually is. When I look at it in the 5-year, it's incredibly consistent, right? Do you see that? Do you see how straight that line looks? That's what we're looking for. I'd like to see that across the board or in the 10-year in particular, but that's a good sign. Okay. 1,000 for 08. Do you play PC games? You know, I haven't had much time lately, but I have been, yes. I traditionally I am a PC gamer. I keep the machine up to date in case something comes along. I've been watching these videos of the new Warhammer game, and that sure looks awesome, but I don't know if I actually want to support that game or not. Have you ever looked at mean revision after a 2 or 3 standard deviation move? So I have done a couple of tests related to mean reversion. I don't know if I would be like in the way that you're talking about it, but the one that I remember back testing in particular was looking at the deviation between price and the VWAP. So like if you got 3 standard deviations above the volume weighted average price, there was like a very high probability that it would reverse. But it wasn't a winning trade, because when it didn't reverse, those were the most massive trends. So like that kind of is what you're going to see with almost everything though, right? Okay, so did you see there, like, they got through 08 pretty okay. Like, I think that they never traded more than 1,000 at a clip there, but they have traded 7,000 net at 08, and now they've done about 4,000 at 07 half. So, I think there's still a decent possibility you could get a little bit more here, especially with the way that it's gone. I guess if we come in and we look at the volume profile, 07 half kind of looks like a key spot, because that was kind of like where the overnight gap was and everything. Below that, then you start looking at the lows. Would they be able to get that far though before we are done? I don't know about that. But the thing that I'm going to be more interested in is what is the net change in cumulative delta? Okay, so from the most recent high here, we were at 22, and now we're at 13. So we've had about 10,000 contracts trade. So that was an average sized move. We didn't quite get 10 points out of it though. So, and especially that little bit of a pullback, that could be enough to just say, okay, that's all we're gonna get. Because I am still, well, I want to let my winners run as long as I can, but I'm still in the mode of, or of the opinion that you could see flows go both ways, and that I don't necessarily want to be in something for a really long time. We built a 25,000 PC trading game. What? You know, if anything happened, like a recession, and like I was really out of a job for a long time, maybe I would go into spending my day making a game. It's like I've always had two game ideas I wanted to do. One game idea was to use Unreal Engine to make a 6 Degree of Freedom arcade shooter like Descent. There actually have been some indie games that have come out that are kind of like that, but they didn't do it the way that I wanted to do it. I have some ideas about how I want it to play that I think would be kind of interesting and cool. And then the other one that I want to make is hedgehogs. You guys remember talking about hedgehogs, right? They're you know, hedgehogs that run a hedge fund, huh? And it could be like a top-down Stardew Valley style RPG, except for that instead of like, you know, farming, you're a day trader at the CME. That's in the 80s. The day trader at the CME in the 80s. Yeah. That's that hedgehogs. I think that'd be an awesome game, don't you think? Yeah, we could make that. That would be the kind of a game. The thing that I like about that idea is that that's the kind of a game that I can do all on my own. You know, like Stardew Valley was a one-person game. Suspenders and pinstripe button-ups, yeah, totally. Hedgehog and suspenders and yes. I keep saying I'm not the main character. I am an NPC. It's just I'm one of those NPCs that helps you unlock new skill trees and gives you quests. There will definitely be a Speculator Seth character in Hedgehogs. Well, so they stepped back maybe like 2 ticks that the micros, I really didn't like the way that the micros responded to that. But they seem to be just kind of chilling there at 08, half okay. So I don't know if I have to get too excited about it. You just got to keep in mind that with the way that this market has been, and like with the move that we had, the chances of them coming all the way back up here, maybe even getting to the higher end of the value area are, you know, it could happen really fast. So I think I still need to remain vigilant. But the flow was mostly the 5-year dragging everything down, and the flow in the 5-year has definitely, what is the word? Moderated itself. Abated. Abated would be a good word as well. It was actually kind of weird because it's kind of like there was a small counterflow and then it's gone flat. So I don't know. I feel like that I caught a good flow. I just didn't really get paid for it, and maybe sometimes it's Friday and that just is kind of what happens. At this point, I think that a lot of it is it's just kind of luck of the draw how it plays out, I guess. I want to think there was a pretty good pick because we did get that good flow coming down almost immediately after I got in. But then I got to remember rule number 4, right? Probably just lucky. Yeah, they're fiddling with that 08 half a lot too. I think I want to recenter on the 08 half. Now I'm wondering, so one thing that we should keep in mind that is a possibility is that we've had a lot of anti-correlation with the S&P 500, and the S&P 500 kind of looks like it wants to take off here. So they've traded back and forth there at 08 half quite a bit, but they're still, well, it's 2000 by 2000 there. So it doesn't actually look to me like the liquidity in this zone is exhausted. That was a strong uptick. I do wonder. Another thing is that it kind of looks to me like the Japanese yen has been falling, and that's been dragging the treasuries lower. And so far, it doesn't look like the yen is done. Too much inventory on you? Well, I mean, there's breaking the highs at least. I don't know how far it can get, but it looks bullish at the moment. Should also note that on that little move lower, we did flatten in the yield curve like we were kind of looking at. I think a lot of people might be bag holders. So why do you think that? 5-year delta. Oh, good catch, Susie. Very good catch. Yes, I see that now. And the 5-year is down 1 tick, although the 10-year is not following it yet. But the 5-year just made a new low in cumulative delta, in fact. So I think I should try and hold out. Okay, so the 10-year ticked down there. Let's see if we can get some weakness there at the bid at 08. There you go. Okay. So they pulled, and then they were able to take that out with 545. So that's a pretty significant change, especially after that last uptick at 08 half looked so strong. For them to now trade back down and it be weak at 08 is kind of, I think, favorable. And the 5-year is pushing into new prices as well. I think 17.75 was the last low before there, and the 17.5 was from like the beginning of the session. So okay, so on the 9th we were 54.11 and we are currently 250 points in 4 days. Okay, so your theory is that we've had such a positive week that the S&P 500's upside might be limited. I think that so hold on. What week is this? Expiration week is next week. I kind of feel like that this is kind of one of those situations where the S&P 500 really tries to press it. And then, like they'll have a pretty good well, I don't know. If we ended where we are right now in the S&P 500 on the day, they would probably be really happy with that, right? So but I think this is one of those situations where they kind of press it and extend a bit, and then next week is when it ends up being like hard for anything interesting to happen, because of expiration. So it had a couple of down ticks that looked really, really good, but it has gone bid at 08.5 again, and I see an uptick in the Japanese yen. So the Japanese yen is coming back up. I'm seeing some shifts. I'm going to scratch. Even though the I got 9 ticks favorable, so I almost got the 10. Um 662. Okay, so I would be underwater 2 ticks right now already. So that was a bit of enough of an impulse. I do think, given my risk tolerance and that it being a Friday, that is right for me to jump out of that. I also kind of feel like that if we were really going to get the aggressive flow that I was seeing, that it wouldn't have flipped back up like I just saw. I kind of feel like that quick flip back up, really just rushing through an area that's still relatively low in liquidity, suggests that the meta order sell that I want isn't actually there. So I was still there's still a lot of things about that trade that I'm happy about, though. So it's not a complete loss. And we could still get in. Of course, if I would get in, I would prefer to have a lower price, like maybe 3655. There's 9.5 goes offer again, and there's a big bit, 2000 by 2000. It pulls a little bit. It's like, now that I'm scared out, now they're going to go for it. That would be par for the course, wouldn't it? This is interesting. So my news squawk just said that Brent crude prices rose above Russia's price cap. So remember, the West has a price cap, and they say you can only sell oil if the price is below a certain amount, right? And if it gets too high, then they're not allowed to sell it for higher than that, right? So what that means for the supply and demand in the oil market and everything, I'm not quite sure, because I didn't really pay too much attention to that when that was happening before. But I'm seeing a pretty strong impulse come through in oil at the moment, a very strong change in cumulative delta of about 1,500 contracts, and the price of oil moving up about maybe 40 cents in that time period. So something's happening there. The Treasury's still messing with them, huh? Okay, well, it's fidgeted in that area too many times. I really do need to give up on the trade. There's a part of me is still like, oh, I still want to be short, and maybe it's gonna happen, but no, I don't think it is. Because I don't, I could be proven dead wrong, but it coming back into here does not mean that it's going to go and press the highs. It could, and maybe we can get some spectacular action, but there's a pretty good chance that nothing's going to happen now. I kind of feel like that was the opportunity for something to happen, and I'm not sure if we're really going to get a real move now. They stepped up to it, didn't go for it. They're going to come back into the value area or whatever and then just chill. That's probably too big of a prediction, but that's kind of what I think I'm Let's come over here to Zero Hedge and see if they got any interesting stories for us to read about the economy in the last 30 minutes of the stream that we've got here. 5 reasons Trump is making the right strategic choice to not debate again. There is a lot of controversy on the Republican side about whether that's the right decision or not. And this is not something that I have a super strong opinion on, but I think that he is making the right decision. Election officials warn problems with U.S. mail could cause 2024 voting disruptions. Can we please just not have voting by mail? It's a terrible idea, okay? Inflation expectations rebound in September as partisan gaps in sentiment surge. After hope-filled rebound in August, analysts expected a University of Michigan sentiment in the preliminary August data to show further improvements with inflation expectations flat. They were right in their prediction as the headline sentiment beat expectations, as did the current conditions and expectations sub-indexes. The gain was led by an improvement in buying conditions for durables driven by more favorable prices as perceived by customers. Year-ahead expectations for personal finances and the economy both improved as well, despite a modest weakening in view of labor markets. However, more notably, medium-term inflation expectations picked up, while short-dated expectations, which largely reflect oil prices, fell to their lowest since December 2020. Finally, we note that confidence continued to rise for Democrats, was flat for independents, and slid further for Republicans. Consistent with their divergent views of the implications of a Harris presidency for the economy, partisan gaps in sentiment inched up. Oh yeah, I forgot that there's still I would say that the mainstream consensus at the moment is that Harris is in the lead. So, note that interviews for this release concluded prior to Tuesday's debate. A more comprehensive look at election expectations will be released next week. Okay, oil's maybe starting to come back a bit. No, man, I told you, you're not supposed to. Don't be superstitious. It's bad luck. Don't do it. There's nothing special about today. There's absolutely nothing special about today. It's just a normal trading day Friday. Just the only special thing about today is the Friday before a Federal Reserve Open Market Committee meeting. And other than that, nothing special about it. Don't break rule number 2. Kind of checking the other markets here. Making sure I'm not missing anything. Well, one thing that I am noting here is that the change in cumulative delta came back up. So I got in, we got about 10,000 contracts short. I got out, we came about 10,000 contracts back up. Almost as though my trade prompted it to move. I'm a little bit bothered by that. When I came in and I took my trade, there was robots following my orders. Did you see that? When I hit it with one contract and I saw 3 hit, and then 3 hit at the next thing, and then all of a sudden it took off almost immediately after I took the trade. So I'm not saying that like I control the treasury market, but I kind of do maybe sometimes. It seems like such a stupid thing, but like if we're in a slow market, could what I say or do possibly affect the instrument? I think that there are some situations where the answer is yes. The SEC and well, but the SEC wouldn't be interested at all. That's just trading, right? Your orders have impact. Now, if I came in and I said something, like let's say I told you all, I really strongly think that this market is gonna be a buy market today, and it's just gonna be like super trend all the way up, and all the while I was planning on selling it the whole time, and I had like a sell order, on my other screen that you guys can't see, then the SEC would be interested, right? And I was making money from doing that, then I think that the SEC would have reason to be in, because that would be market manipulation, would be putting information out into the market that is false in order to induce other people into making trades. But if I'm over here taking my own trade and it just my own trade happens to have more impact than others because other people are following me, there's nothing wrong with that. Really, what it ends up being is just a kind of a it's actually a handicap for me, is what it is. It means I have to be more careful, because if I take a trade in a situation like that, where there wasn't, I thought a flow was coming, that flow didn't actually come, then that means that it's gonna unwind on me, and I have to be fast, or I'll take the loss on it. It works against me. It works against me, and that's why I'm part of why I'm so. That's what I'm thinking when I'm trying to be selective. How much is that to the reality? I don't really know. I don't have the data to calculate that. But I found that just assuming that I have that impact makes my trading. And it will make you assuming that you have that impact will make your trading better. Because someday, if you're actually successful, you will have that impact. And then you're going to have to think about that and factor that in. Oh, I'm going to move the market. And then if there's nothing comes in behind me, me getting out is going to make it unwind, and I'm going to lose money. So I really have to know that somebody else is coming along if I'm going to take a trade. Yeah, now, so let me show you something here in the treasury. You see this thing right here? Those aren't very common. Normally what will happen is you get these. You see that? There's that's a liquidity hole. They'll stay there. They'll trade that sideways for a really long time. I call them zippers, because if it's a really perfect one, it's, up, they tick down, they tick up. It's like a zipper. This one is a 4-tick range. Much more rare. I hate these. I hate these. This used to, when I was a beginning trader, this used to fuck me up so much. I hate these things. So now I'm definitely not going to take another trade today. I'm definitely not going to take a trade. So here was a tweet from Zero Hedge earlier. Why are yields surging? Oh yes, U.S. interest hit 1.6 trillion by year end, making it the largest U.S. government outlay. If only we could cut interest rates by 50 basis points to bring the interest rate that we get on government debt and bring it down and make that things a little bit easier for us. Darn. If interest expense will soon pass Social Security spending and become the single largest outlay of the U.S. government in sometime in late 2024 or 2025 at the earliest. In other words, game over. Which begs the question, why would Trump even want to be in charge when the house of cards finally comes crashing down? Let Kamala have it. No, I don't think so. Actually, okay, so this is interesting. As a party, I would not want to be the party in charge when that happens. But as a president, I would much rather that sort of a thing happen in my second term than my first term. If that happens when Kamala is in charge, she's going to have all of these incentives to please voters and maybe make foolish decisions that don't really help the problem, but make voters happy instead of making the tough but correct decisions. Trump, he knows it's his. Well, I don't know if that's actually true though, because Trump might be too concerned about his legacy to do the right thing too. I don't know. But are we gonna have some sort of a debt crisis next year? I don't think so. I mean, first of all, I do think that interest rates are going to normalize, and second of all, the economy is looking okay. And if we do have a recession, that might maybe actually help. But it's as long as, just like whatever our next period of growth is, that the growth is really, really high, right? Because that's kind of been the problem is since 2008 was we took on a lot of debt and then we didn't get high growth. And then we took on a lot of debt for COVID and we had a short period of high growth, but it wasn't long enough. Well, I guess part of the thing though that the politicians aren't telling you is that they are going to have to cut services. They just really don't have a choice. Can't pay for all of the things that they want the government to do. Are you a profit? Sometimes. Sometimes I'm a profitable trader. Sometimes I'm a big pussy, like this week. I actually was that. No, I think that last one was the second one that I took this week, wasn't it? Let's see here. Oh, that was the only. It was the only live one. So this week, I am 0. So I'm gonna count that as green. Totally. This I'm still positive on the month too, actually. 0 equals not a loss. There you go. I think there should be a rule number 5. But how can I put rule number 5 in a way that is short and funny? Five years or shut up. That's what I think it is. Like if you don't have a 5-year track record of profitability, there's no reason to talk about your performance. I don't have a 5-year track record. I've been trading for that long, but like 2 years ago I was profitable, last year I was not, for instance. What's your 3-month outlook on the NASDAQ? Oh, 3 months is maybe 3 months isn't too far. I think that we're likely to get over this little risk off spell, and as there is a possibility that it gets worse in October. But then if there's not some sort of a financial crisis during that period, which is unlikely, then we're pretty likely to have a pretty decent run into new highs going into the end of the year for the, the window dressing and all of that sort of stuff. The end of the year trade tends to be long. So once you get out of mid-October, now, of course, there's going to be a lot of volatility for the election, so there was a research paper that examined Friday the 13th had lower yields than other. Yeah. No, I think I've read that. I think I've totally read that. I have done some research to suggest that market participants are superstitious and that those behaviors can be seen in the numbers from the market. That is a thing. But I still hold that being superstitious is bad luck, and that, trying to trade based off of those things don't really help you. Yes. Rule number 1 is we don't talk about speculator Seth. Rule number 2 is don't be superstitious, it's bad luck. Rule number 3 is you suck. Rule number 4 is you were probably lucky. And rule number 5 is 5 years or shut up. There's no point in talking about your performance unless you have 5 years worth of performance history. Oh, you still think they are going to hit the 4K at 03.5? I don't know, man. Well, okay, so one thing is that we did get a pretty big sell impulse in here through somewhere. There was an iceberg of something. I don't think that I can really justify taking a trade. Number 1, we're still kind of in this minefield. Number 2, I don't have a whole lot of time left, right? We've got like 5 minutes left, so it is kind of starting to do this thing where it's like, okay, fine, Seth, you got us, you got in on it. We didn't take it because you got in, so now we're going to wait until you're gone, and then we're going to sell TF out of this, right? Now, that order down there is curious, isn't it? Like, number 1, it's huge. That's a huge order. I think it's pretty much been there the whole time, hasn't it? It's kind of in a weird spot, and it's a Friday too, so it's just kind of a weird order. But my own research kind of suggests that big orders, like big order outside of the range, do we have a tendency to go and get it, sort of a thing. That's not. There's nothing actually to it. So, yeah, but I guess we'll see. That big, there was a big iceberg on the bid that they sold through that really changed the cumulative delta up, and the 5-year is still kind of down. So I think that the conditions are that I don't have a trade, but maybe if you can stick around longer, there might be some selling after I leave. Kind of looks like there might be some selling after I leave. So I had another thought about this Donald Trump thing. It's weird to me that Zero Hedge is saying, why would Donald Trump even want to be president if that's the fiscal situation that we're going into? So would that mean that, like, you have a Kamala Harris presidency, it ends up being a complete and utter disaster, and then Donald Trump runs a fourth time? Please no. Please no. It's like, I'm gonna vote for Trump. I'm broadly supportive of him, but like I can't handle a fourth one, man. Please no. I want him to win and then go away. Like, I think that he speaks to a lot of problems. I'm not going to say that his solutions are always the best. And I'm not going to say that he has always the best personality to be president and all of those sorts of things. Okay. But they are things that need to be addressed. And what I would like to see is now that has taken over the party, I want to see if the party can extend and build on that without him, or at least without him being president. You know, if he loses, then all bets on that are off, aren't they? If he loses, no, I don't think it would. If Donald Trump loses, I don't think that the establishment wing of the Republican Party can recover. I think that they are forever damaged. The voters will never trust them again. And anybody that seems even remotely establishment, pro-CIA, pro-spying apparatus, foreign policy, establishment, whatever, the voters will automatically not vote for them. And you will continue to get guys like Donald Trump dominate. Like if there's not a better choice from a Donald Trump, then you'll get like a Vivek, you know, who's like a way worse candidate. But like, if he's the only MAGA choice, then they're gonna pick him. It's just interesting to see human nature. Well, their superstitions can show up in the data, that's for sure. But again, like I was saying earlier, you want to know, like, what is that the markets that will do because of human behavior. I think that the strongest human behavior, the irrationality that we see in human behavior that comes out the most, is overconfidence. Hey, I'm new to this channel. Do you have any idea about DVO1 and if it can be incorporated in trading bonds? Okay. So DVO1 is essentially the dollar value of a basis point. Okay. DV, dollar value. And a basis point is 0.01, right? Like when we say they're going to raise interest rates 25 basis points, they're saying that they're going to raise interest rates 0.25, right? So 0.01 is a basis point. So the dollar value of the basis point, that's what it means. Essentially what that means is if basis point moves 1 basis point, if yields move 1 basis point, what is the dollar value change of the end treasury is what it means. So in the micro treasury yield futures, the micro treasury yield futures are an instrument that are designed so that the dollar value of a basis point of this instrument is $1. If it moves 0.01, oh, sorry, not $1, $10. If it moves 10 ticks, which is 1 basis point, because these trade in hundredths, right? If it moves 10 ticks, then you make $10. Okay, so the DVO1 is constant. It's always $10. Okay. With these main treasuries, that's not the case. So with these main treasuries, the value of the actual bond can disconnect from the yield. And so essentially what happens is, if the DV01 is high, that means that a change in the interest rate moves that instrument a lot. It's worth a lot to you, number of ticks, whatever, right? If the DV01 is really low, then that means that a change in the interest rates doesn't move your instrument very much. Now, the reason that those things are important is like for people that are like trading the basis and things like that, they have to go down and they have to say, okay, the dollar value of a basis point right now is X much, and there's a chance of interest rates changing this amount. Ergo, I have to have this much money in my account to be able to account for the natural volatility of this instrument so that I don't get stopped out of my position before the settlement. And, then I would lose money. Otherwise, it's like 99% chance of a win. Right. So that's kind of the main reason why you might hear people talk about DV01. There are some interesting things about like when DV01 is changing and like why and what that can potentially mean. But as retail traders, we don't get very good insight into that data. Like I don't have a way of charting DV01 on a chart for you here against the overall treasury to show you if there's some sort of a correlation between when which way the economy is going and whether DV01 is going up or down. But if you were really motivated, maybe you could do that. There are tools on the CME website that allow you to see what the DV01 is at the time, and I guess you could go and look at it every day and chart it yourself or something. I don't know. If you had a Bloomberg terminal, maybe you could do it. So DV01, I think, is an important concept, worth knowing and understanding, but it's not something that's really going to directly help you or is relevant to most of what we do. It's kind of just more of that background information about the bonds that we want to know, but even though it's not directly relevant to us. One thing that you can do is you can come down and you can say, okay, what is DV01? And then what if we had a 50 basis point cut instead of a 25 basis point? So then you could say DV01 times 25, how much would that move it? And then you could use that to try and estimate what price the full treasury future will go to try and price that. So there are some instances where you can kind of try and use that to make estimates about where the treasuries will go based on evaluation, right? Because the valuation is actually like the prediction is what is the interest rate going to be? So then you have to come in and say, okay, if the interest rate goes to here, what is that going to be in ZN? Then it's relevant. Well, it's time for me to get going. It is still flat here. I bet you like as soon as I shut this down, they're just going to like plummet down. But otherwise, I'll see you guys next week on Monday. Federal Reserve Week should be fun. In the meantime, stay